Get ready for the big revival. The real estate revival, that is. Now on 77 WABC, your New York weekend.
Get ready for the big revival.
It's Rand on Real Estate. Look out! With Greg Rand.
Welcome to the Big Real Estate Revival. My name is Greg Rand. I am your host. This is 77 WABC and WABCRadio.com. And I'm so psyched up to be here. It's been a phenomenal month in the real estate investment world. And as you know, this show is all about bold-face entrepreneurship in the face of an ugly recession. My job here, my mission in life, is to help you understand the American housing market as an investment opportunity. My hallucination is that you're thinking about this. My belief is that you, your friends, the barbecues you're at today, it's a gorgeous day here in New York, everyone's talking about this housing crisis and starting to realize that it's a big opportunity, but how do you go about it? That's what we're here for. So I want to take your calls. Our number here is 800-848-WABC. That's the same thing as 800-848-9222. Give us a ring. Ask me whatever questions you might have about real estate investing. As I said, I believe that you've been dreaming about this. I know the world is full of people who realize that real estate is a way to create wealth. They don't know how to go about it, so we're here to help. My website is ownamerica.com, as in how awesome is it that you can own a piece of the country that you love. Ownamerica.com. We've got free classes up there, video-based classes. We've got research resources for you. We got a lot of stuff all designed to let you learn this for yourself. You see, there's one thing that I've learned, especially over the last couple of years, and that is that if it's important, you better know how to do it yourself. If it's important to your future, you don't want to rely on anybody else. There are too many folks out there that are relying on either an employer or a pension or a government to take care of them. And the truth is that this is the United States of America. It's about you taking care of yourself. And if you have an entrepreneurial spirit, the residential real estate marketplace is a playground for you if you know how to go about it. This next hour, we've got some interesting stuff coming your way, including your calls. We have an interview with the president of an international real estate organization. Her name is Tami Bonnell. She's the president of U.S. operations. She'll be on the air with us in the next segment talking about some interesting things that she's seeing out there. You're going to learn from a major real estate expert in that segment. And first, what I want to talk about is something I always do at the top of the show, which is to try to help you build up your armor against the negativity out there. You know, for whatever reason, and I don't pretend to understand why, there is a bent out there in the media to try to drag your spirits down. If it bleeds, it leads, right? That's the slogan. And maybe turning the corner now because, well, put it this way. I think we all now know that virtually everybody in the media has chosen sides in politics, right? Have we figured that out by now? Like, depending on what channel you're watching, the people that are on the air have a horse in every electoral race. And so you have to know which channel you're watching. Otherwise, you're susceptible to that being propaganda. I'll give you an example. If you watch the Fox News channel right about now, you're going to be hearing a lot of negative stuff. If you watch NBC News right about now, they are cheering on the recovery of the economy. That's because one channel wants to see the presidency change hands. The other channel wants to see the president stay in office for the rest of his life. And, of course, if you go back 3.5 years, it was the exact opposite. You had the media that is tilted towards Republicans was trying to tell everybody everything's going to be okay, and the media that was tilted towards Democrats was saying things like, we're going off a cliff. And what's important, and the way this dovetails into real estate content for this show, is the idea that you have to question the messenger, all right? And you have to recognize the fact, for example, if you're watching Fox, okay, I'm a fan of Fox News. I go on there all the time. I'm a fan because I like the network. It just so happens they also put me on the air to talk about real estate matters. But I know that they are tilted towards the Republican side of the aisle, right? I mean, you know that, don't you? It's funny because my brother Joe, who is a fan of the other side, it's always fun to tweak him because he hears the slogan, fair and balanced. We report, you decide, and it drives him crazy, right? And I always tell him, Joe, that was a response to the other news networks giving you quote-unquote objective news that had a major slant towards the Democrat side. So Fox came along to service the other part of the market, and they put as their slogan, it remains their slogan today, fair and balanced. And we know that we're watching tilted news. We know we're watching slanted news, and we like it that way. If we're fans of Fox, it's because we like watching news that is delivered to us in a way that kind of clicks with our view of the world and our sensibilities. But here's the thing. If you're watching that, or on the other side, if you're watching, say, I don't know, MSNBC or NBC News, if you don't realize that you're watching slanted coverage, then it's propaganda, right? Propaganda is in the eye of the beholder. If you're watching something thinking it's straight objective news, but it's not, then you're being fed disinformation. If you're watching it because you know, I like watching NBC, Good Morning America, whatever, because I like watching things that are tilted towards my side of the aisle, then it's not propaganda because you're doing it affirmatively. You understand that what you're watching is slanted. So how does this connect with real estate, you ask? Because this is one of those times in history where you have to know for yourself. Okay, you've got to know that what you're watching, if what you're watching is slanted, you need to know that so you can filter it, so you can know if what you're watching or listening to or reading is being delivered to you to try to persuade you. Because if you don't know that, you're susceptible to being manipulated. When it comes to investment, okay, whether it be in the stock market or the real estate market or in gold or anything else, it is definitely one of those times. I mean, Bernie Madoff made it crystal clear to all of us, right? You need to know this stuff for yourself. You need to understand what you're doing, and don't do it because I'm saying to. Don't do it because anybody's telling you to. Do it because you understand it well enough that you're comfortable and you're confident. My mission here is not to persuade you to do anything. My mission here is to educate and inform you so that you can go on offense yourself, so that you feel comfortable and confident. You can internalize this information, and it can make you a bona fide expert. And you know, we do a segment here called Smart People Saying Dopey Things About Real Estate, and we're going to do it again today because guess what? Once again this week, some smart people said some dopey things about real estate, but there's kind of a different twist. We're going to go back to my old buddy Warren Buffett. I used to look up to Warren Buffett. He used to be a hero of mine until 2008, right when the credit crisis hit, you know, maybe August, September 2008. And that was when Warren Buffett stopped being Warren Buffett, the businessman, and started being Warren Buffett, the private citizen who was trying to influence public opinion for political reasons. All right, you might remember this. Okay, Warren is a guy that is renowned across the globe. He invests in companies. He's got a winning streak a mile long. And yet there he was. This is a guy who invests billions of dollars of other people's money and a lot of his own money, billions, in companies. And there he was in the third quarter of 2008 talking about, quote unquote, the economy is going off a cliff. All right, the economy going off a cliff. You're not used to hearing at that time Warren Buffett using superlatives like that. That wasn't really his style, and yet there he was. Well, since then, it's become clear. I mean, listen, we all know now that his secretary doesn't pay enough or pays too much in taxes, and we hear all the time from Warren now on things that are not business related at all. And that's why I say I think Warren Buffett, the businessman, has now taken a sideline role to Warren Buffett, the private citizen, who's buddy-buddy with the president and who is doing anything he can to try to persuade a lot of people to vote the same way that he does. So, of course, he goes on CNBC to do one of those 45-minute interviews where they're slobbering all over him. They're gushing over him. Nobody, by the way, nobody ever asks him, hey, Warren, what's the deal with your secretary is paying too much in taxes? And yet, at the same time, Warren Buffett, the businessman, is fighting his corporate taxes in court. Nobody ever asks him that, like, why don't you pay your tax bill? If you're so sure that you're not paying enough in taxes, why don't you pay what they're asking you to pay instead of fighting him in court? But they don't go there because it's an NBC network, and so therefore Buffett's a god, especially because the private citizen Warren Buffett is cheering on Democrats. But I'm kind of betraying which way I land on this issue, but the point here is that Warren has been saying some things about the economy, trying to spook a lot of people, and now he's trying to get people feeling good about it. I want to play you a clip of Warren recently on CNBC talking about the housing market. Do we have that queued up? Let's go.
Equities are still cheap relative to any other asset class.
But they're not.
I would say the single-family homes are cheap now, too.
You would?
Yeah, single-family homes. If I had a way of buying a couple 100,000 single-family homes and had a way of managing, the management is enormous. It's really a problem because they're one by one. They're not like apartment houses. So, but I would load up on them, and I would take mortgages out at very, very low rates. But
okay,
if
so
anybody is thinking about
Warren would load up on single-family homes if he could. Now, it begs the question, why can't he? And the answer seems to be that if he wants to buy, everything Warren does is in a big scale. So he wants to buy 10,000 homes, and he feels that he can't do that because managing single-family homes is a one-up proposition. You can't just manage 1,000 of them at a time. Here's the good news. This is one of those circumstances where, by the way, Warren's right on two fronts. On the first front, it is a phenomenal time to be loading up on single-family homes. And number two, it is very difficult to do it on a grand scale. The industry of residential real estate property management is not quite there yet, where someone like him can buy 10,000 houses across America and efficiently manage it. So this is one of those times where being the little guy is an advantage. All All right, normally you're at a huge disadvantage against guys like Warren Buffett and his people because they're surrounded by 25 different screens that if a CEO got a bad night's sleep, they find out about it, they sell the stock, and you're waking up in the morning losing money because you're a sucker because you're competing against professionals who have tools you don't have. In the single-family housing market, you have an advantage because your scale is not going to be as big as theirs. They have difficulty managing the complexity of dealing with a lot of individual property units, but you have an advantage. What we're going to talk about throughout this show, what we always talk about, is how you can garner the knowledge on some little small piece of dirt that no expert, all the way up to Warren Buffett, no expert out there can be as knowledgeable as you are on that little piece of dirt. And I'm going to talk to you about how you go about gathering that understanding and that knowledge so that you literally are the smartest people on the planet about that investment market. Before you even talk about a property, we're talking about the town it's in. And we are at a time right now where you have a distinct advantage over the institutional investors, and it's my hope that you will get inspired by the show and go and do something about it. All right, you're listening to Rand on Real Estate on 77 WABC. When we come back, we're going to have Tami Bonnell, the president of Exit Realty USA. Our number here is 800-848-9222. Again, 800-848-WABC. Give us a call. We want to put you on the air. We want to share your ideas, my ideas, and build your confidence to take action. This is Rand on Real Estate, 77 WABC. Back in a minute. Welcome back to Rand on Real Estate. I'm Greg Rand on 77 WABC and WABCRadio.com. We're broadcasting from Midtown Manhattan, right above, Madison Square Garden, where the Knicks had a game today or something because the street was packed with crazy people. But it's beautiful weather, and it's a beautiful time to be alive, especially if you are in control of your own life and in command of your destiny. We're talking here about investing in real estate for securing your financial future. We've got somebody on the line now who's become a very good friend of mine and who commands a large international real estate company. It's Tami Bonnell, the president of U.S. operations for Exit Realty. How you doing, Tami?
I'm doing great. How are you?
I'm doing great, too. Thanks for being on the show.
My pleasure.
So Tami, just to set it up here, she has got a unique kind of prism that she sees the world through because she has an army of tens of thousands of real estate professionals on the ground, mainly in the U.S. and her sister organization in Canada. And so she gets a chance to do what I've been doing also, which is travel around a lot of places and get her finger on the pulse of real estate markets everywhere. So Tami, give me from the top level, what kind of things are you seeing this year that might be different than what's been going on the last couple of years?
Well, obviously, preaching to the choir, having a conversation with you, but certainly seeing the market get busier, seeing more investors jump in, and from every age range, which I think is
it's interesting,
pretty terrific. The consumer is in control, and I think that they want to see, it used to be that the biggest complaint was communication, and now it is truly that they want information, they want to be part of the process. And I think that as long as you're really educated about the process, you're going to really enjoy the process. It's much more positive environment than I've seen in a really long time.
That's great to hear. I'm glad you said that being in control. That was what we were talking about in the first segment, is the idea that unlike other investments, owning real estate is really more like owning a small business. That's a better way for an investor to look at it. It's not a kind of thing where you write a check and you walk away, and a lot of people don't do it because they say, Tami, they say, I don't want to be a landlord. God forbid my tenant calls me with a leaky faucet. Oh, my God. It'd be like, it's like a leper wanting to give me a hug. I can't have that. Can't have anybody calling me. It's too much of a hassle. They want to look at real estate investing kind of like they look at when they buy a stock. They send the check in and they just wait for the returns. But it is much more of an entrepreneurial thing. And what it sounds like you're telling me is that the people that you're seeing out in the field recognize that and they don't shy away. In fact, they revel in it. They like the idea that they're have a degree of control and influence over the outcome.
I absolutely agree with that. I think the key is knowing why you're doing the investment. Are you doing it towards retirement? Are you doing it to put your children through school? Are you doing it for steady cash flow now? And the more information you share with whoever's representing you, the better off you're going to be.
That's funny you said that, too, because you and I are on the same page on so many things, but we haven't talked about some of these issues, which is why when we talked about setting this interview up, I said, let's not talk about it too much before we go on the air. Let's do it for real so that it's spontaneous. There are more and more people, more than I even expected, that are coming into this realm with their heads on straight, more than in the past. For example, they don't have that dopey business plan. If I want to buy a foreclosure at half price, they're coming in not looking at a big quick flip, get rich quick strategy. They're looking at, like you said, I have young kids. I want to send them to college. I want to retire in 20 years. I want to build a nest egg, and I want to use real estate to do that. That's really gratifying because if you go at this thing with realistic expectations, you're going to have a pretty good outcome. You know, I mean, I can't guarantee anybody anything, but if you buy a house that's a good house in a good school district in a good place, and you rent it out to nice people and hang on to it for 20 years, I have a pretty good feeling about the outcome there, right? You're not going to lose your butt on that investment if you do it right and have the long-term expectation. So you specifically are seeing some a major uptick in activity from international investors. Is that right?
You know, we have, we're in Canada and the United States. We see a tremendous amount of business going back and forth, and that's another thing that's really good to know is that flow of where the business is coming from. And probably 10 states in the United States, we're getting better than 30% of our business is coming in from Canada and in cash.
Wow. Wow, when I see that's meaningful to me on so many levels, and the most important of which is that sometimes on this show, this might surprise you, Tami, people get mad at me for being optimistic, right? I've gotten some hate mail, which is actually pretty cool, getting hate mail. You know, none of my friends get hate mail. So I get some hate mail from people who are like, you know, you're supposed to be wringing your hands, Greg. You're not supposed to be feeling good about the possibilities in the future. We're all, you know, nobody has any jobs, Greg, and everybody's underwater on their mortgages, Greg, and what are you doing being optimistic? And to them, you know, to be able to point to Canadians, and of course there's investors coming out of China and out of Australia and all over the world, but the Canadian money flowing into the U.S., what it basically tells me is that they know something that a lot of us have forgotten, or they know something that we take for granted, which is this is America. We go through slumps, but we always recover.
Right.
We always have and always will. They recognize that as plain as the nose in their face, and sometimes people here forget it because, you know, they live here, they're too close to the situation.
Well, I think that you can put yourself in your own bubble by not paying attention to everything that's around you. What I'm really thrilled with is that we're getting an awful lot of really young people that are getting it about investing really young. They're really looking at the whole picture, and there's so much information. I mean, you know, obviously, since you wrote the book, but that past, present, and future, understanding the market, the more I understand what's gone on in the past in that specific area, the more I know what's going on presently, the better I can predict the future. You know, we have to be pretty good forecasters. It's important to be able to do that, but I think there's enough information for the consumer to make a very educated business decision about their future. I think that it's not just a stab in the dark. I think that actually going through the recession has made them more conservative about what it is they're going to do, and they really want to make sure they get value and a return so that they're getting all the information. Let's look at it realistically. How many houses do you really think are underwater, percentage-wise? I mean, I know it's glaring and it's in front of everybody's face all the time, but that isn't the whole population. Yeah,
in fact, there's actually the stat that I love that you never hear is that there are more people with houses paid off than there are that have negative equity. You know, people throw around the number of people that are underwater, but they never talk about how many actually did it right, bought a house they like in a place they like, paid the thing off, and are now sitting on a paid-off asset. But you mentioned the young people. That's really encouraging. I had not heard that before. That because obviously, if you're young, that means, you know, if you're in your 20s, retirement is decades away, which means you have all the time in the world to ride cycle after cycle up and up and up and up and build your wealth. But also the fact that everybody focuses on how we have a lot of baby boomers, 70-something million baby boomers that are going into retirement age over the next decade, and how we have to take care of them and how it's a burden on the rest of society or whatever. And we only have half that many Generation X. But if you go one more generation, the Generation Y, or what's now called the Millennials, they're as big of a generation as as the baby boomers, right? It's like 75 million.
That's right.
Generation Y. So you see that. I've heard you talk about that on stage. Tell me more about those guys.
Well, Warren Buffett actually just had this terrific statistic that I think is, noteworthy. There are 4 million people in the United States turning 22 every single year.
Really?
4 million turning 22, and we have more multi-generational households than we've had since the Depression. Sooner or later, they're going to want to have children. They're going to want to move on, so that creates a need, right? That
you've got a pent-up demand for housing.
Both with people purchasing and with people renting, and I think that that's just going to see the investor piece of this puzzle grow and grow. I mean, it was almost a quarter of the population, a quarter of the purchases last year, and I think that it's going to be stronger this year, don't you?
So you're saying investors were a quarter of the purchases this year?
That's right.
Right, yeah, that's one of my stats that I like talking about, is that nobody really realizes how there is a quiet revolution going on, I think is kind of the point here, okay? 1 in every 4 homes that were purchased in 2011 were bought by investors, and the majority of them, their plan was to rent it out to somebody else. And so it isn't like, you're still buying low if you buy now, but you're not alone. There's a lot of other people taking the same plunge, which is why, from an entrepreneurial perspective, if you're somebody out there that has a couple of dollars set aside, who's getting sick of getting a 1% return on your money in the bank, or maybe losing your money in the stock market, if you've been looking at residential real estate and you start to look at it like an entrepreneurial opportunity, a small business, it's really cool that way. I mean, you start researching markets, you start doing things like, you get my book, Crash Boom, go to Amazon and buy it. Not you, Tami, I know you already have it. But people listening, you go and get that, you read, it gives you ideas of how to research. You pick a place that you like, and then you start digging into that place, like little things like going to a planning board meeting. Planning board is, made up of people in the local town who give thumbs up or thumbs down votes on whether you can build a store here, whether you can build a house there, whether you can put an awning in front of your store. They are the ones that give approval for these things. And you go to one of those meetings and you'll get a sense if they are pro-business or anti-business, pro-investor or anti-investor. Just knowing that by doing original research, your own personal research. You're not relying on anybody else. That's the whole point. You're relying on yourself. You build the wisdom yourself, and it's an incredibly powerful thing.
I absolutely agree. And I think that when you get to do more of the homework, even on the past, present, and future, I mean, obviously your book does a wealth of that, but when you really look at, until this last nightmare, which unfortunately more people use their home as an ATM, and there wasn't that equity in it. Before that, people literally had tremendous equity in their homes, and they built it that way.
Right.
So they had a nest egg for whatever they wanted to utilize out of it, and they all had a nest egg, and they got it. That, yes, we want a return on investment, but it's a long-term investment. The great thing about being an investor, though, is that you get all those benefits short-term of all of the opportunities for tax write-offs and cash flow, and you can do all the homework up front so that you really do know exactly what you're getting into. And then long term, whether that's retirement or putting children through school or paying for a wedding or whatever it is you decide to do with the money's there, or even to invest in more property as time goes on.
Right, beautiful. All right, I have to jump off to a break now. Tami, thank you so much for being on the show. This is Tami Bonnell. She's the president of U.S. Operations. Tami, great to have you. Thank you.
Thank you very much. Have a great day.
You too. All right, it's Rand on Real Estate on 77 WABC and WABCRadio.com. Give us a call. The rest of the show is dedicated to your calls. 800-848-WABC. That's 800-848-9222. See you after the break. Welcome back to Rand on Real Estate. My name is Greg Rand. This is 77 WABC and WABCRadio.com. We're talking about entrepreneurship and investing in real estate. We're having a great time. And we've got a caller on the line here who has a very interesting question. How are you, Ann from New Jersey?
Hi.
How you doing?
Greg? I'm good. How are you?
I'm good, thanks.
I happened to be listening to you. I didn't know your radio show existed, actually, but I always listened to 77. I was coming home from doing some food shopping, and now you got me thinking. I have paid off my first home for many years now, but since my husband passed, I can't keep up with the outside maintenance, etc. So I did buy myself a townhome.
Great.
So I wanted to sell the first home, but now you're making me think that should I rent? But I don't know if I want to be a landlord.
Ah, the dreaded landlord. Well, I'm glad. First of all, it's a compliment to me that I made you think. I appreciate that very much. That's kind of what we're trying to do here. And causing you to look at that and say, you have a home that's paid off. The question is going to be, you don't have to answer this, for all the listeners to hear, but ask yourself, what are you going to do with the money if you sell it? If you sell it and you need the money, you want to live on the money, you want to have it be liquid, that might be a reason to liquidate. But as soon as you get the money in your hand, if the first thing you want to do is put it to work for you and invest it, I'm going to wind up recommending you put it into real estate anyway. And so if you've already got a home and you know the neighborhood, you lived there for how long?
Oh, since 76. It's a great neighborhood.
Okay.
Tiny little town. Very nice place to live.
Which town is it?
Califon.
Califon. And where is that? I haven't heard of Califon.
It's in Hunterdon County.
So describe that. Is that South Central Jersey? Where is that?
Central Jersey. Do you know Flemington?
I do.
Well, it's about 20 minutes to a half hour north.
Okay, so you're in Flemington car and truck country then, huh? I heard the commercials on ABC for years from those guys.
Yeah.
Well, that's the question. It's a personal question for you to answer for yourself. If you get the money in your hands, what are you going to want to do with it? Because the best opportunity to invest right now, if you want to park the money someplace where it's going to grow, is to put it in real estate anyway. So rather than, and there's probably a realtor in your town right now who's twitching because they're hearing me give advice that says don't sell the property, but there's a commission that you're going to have to pay to sell the property.
Right.
There's closing costs involved. If you go and buy another property with the money or two properties with the money, you're going to incur closing costs on that. And so,
what I did, Greg, to buy the second home, I had money in an annuity, and I took money from the annuity, and I was going to put the money back into the annuity when I sold this place.
You know what? Maybe the best way to advise you on this, assuming that you have the flexibility to do it whichever way you want, is to say that right now is a definite buyer's market. Okay, you probably experienced a pretty good negotiating position when you bought the townhome because sellers are on the weak side of the negotiating table right now. And for that reason alone, it might be worth just saying, you know what, I'm going to wait a year. Let me see how the economy recovers. Let me see what happens with the presidential election. You know, there's a chance that whichever way it goes, we could see a much better economy a year from now than we're seeing right now. And so for that reason, you know, if you don't have to sell when you're the most disadvantaged position as a seller, maybe it's better to wait. And, you know, you're in control. That you should look at that money in the house as liquid. Because you can sell that whenever you want, okay? Even in a buyer's market like we have right now, you could sell a property in a couple of weeks if you price it to sell.
Right.
So you can always get your hands on that money within a couple of months' notice. And so if you can, I would hang on to it and see, you know, you don't want to be a landlord, so look for a property manager locally. Somebody and check their references, you know, get some references. If they don't give you references, don't hire them. But if, you know, managing one property isn't a major headache. And I'm not suggesting that you do it yourself, but it's not a big burden on a property manager to add one unit onto their roster.
What does that cost to hire a property manager?
Property managers will usually be on a single-family home something like 4 or 5% of the annual rent. So if you, let's say you rented your property for $25,000 for the year, it would be called 5% of that would be the annual property management fee. They might also charge you a commission for renting the place out. You know, sometimes the property manager will do the rentals. Other times they'll want to have a real estate company do the rentals, in which case you could incur a commission when you rented the place out.
That's a one-time charge. That's
a one-time each time you have a new tenant. So if you get somebody in there that stays 2 or 3 years, what you're going to want to make sure that you do is check the credit on the tenant, okay? Screening a tenant, the best way to make sure you get a good tenant is check them out on the way in, all right? I'll give you an example. I own a bunch of rental property, and one of them, once I did a Google search on the name of the person who was proposing to rent my condo, and it turned out that they were in a lawsuit. Guess who they were in a lawsuit with?
Oh.
Their last landlord.
Oh,
so I said, you know what? Maybe that's one of the ones I won't go anywhere near. Something as simple. Right. You screen their credit. You meet them. Always meet them if you can, because sometimes you get a vibe on people. But I'd love to see you hang on to it, because you know what? I never met anybody who regretted hanging on to property. You know, the longer you hold it, the bigger the portfolio. If you wind up with a portfolio of 2 properties, the one you live in and the one you used to live in, that's a great chunk of wealth to pass down to your kids.
And a realtor can do the background checks on any...
They can do credit checks, yes. They can do the credit checks. So, you know, you're going to want to look at this like you're a bank giving somebody a mortgage. You want to look at it and see, are they paying their other obligations on time? And the caveat that I'll give that is there are a lot of good tenants out there right now that are coming out of a house because of a foreclosure or because of what's called a short sale. They owed more than the house was worth, and they needed to get out of that. And so sometimes the only way to do a short sale is to actually stop paying your mortgage. That way the bank pays attention to you. So there are some people that might actually have damaged credit, but they can explain it. So they've been paying their car payments and their credit cards and their cable bill and paying all those things on time. And the only thing they were late on was their mortgage for a few months prior to leaving out of a short sale. That might be the kind of thing that I would overlook just because it's explainable.
Okay, and obviously, if there's, if I get a renter, say, and something happens with the plumbing, it's my responsibility to fix it.
It would be. And here's another little nugget, a little gem for you. There's something called a home warranty out there. I'm not sure if you've heard of home warranties. You probably did because you just bought a townhouse. A home warranty is something you can buy that warranties the systems in the house, so the heating, air conditioning, the appliances, things like that. You can buy a home warranty for usually under $500. And what I do is I buy the home warranty, you get an annual warranty, and then if something breaks, the warranty company will cover it if it's one of the covered items. But the best part is you give the 800 number to the tenant. All right? So they can call the call center themselves and say, hey, the air conditioner broke. And then they will send a contractor out, and then you'll pay a deductible. But it's a beautiful way that if you want to mitigate the phone call that says, the garage door broke, come fix it, you can actually mitigate that by buying a home warranty and giving the 800 number to the tenant themselves.
Huh.
All right? All right, well, thank you. I hope this was helpful, Ann.
Very, very helpful. Thanks, Greg.
Okay, have a great rest of your Sunday. You're listening to Rand on Real Estate on 77 WABC. Our number here is 800-848-9222. Give us a call if you're thinking about doing some real estate investing in the area or out of the area. I know a lot about a lot of places around the country. I'd love to help. Back in a moment. Welcome back. This is Greg Rand, Rand on Real Estate on 77 WABC and WABCRadio.com. We got lots of calls on hold and only a few minutes to get to them, so I'm going to kind of go rapid fire here. But we have some people who have some questions. Is it Manya from Springfield, New Jersey?
Hi, how are you?
How do you pronounce your name?
Manya.
Manya.
Like Tanya, but with an M.
Got it. Okay, cool. So what's on your mind?
My husband and I have a two-family, rental property investment. We also have our single-family home. We have a lot of equity in the home, and we're just debating should we sell it. No one wants to give us the, refi and pull money out.
Okay. So what would you do with the money if you pulled it out?
Buy more.
Real estate with it.
Yep.
Interesting. Well, I'll tell you, I love 2 families, 3 families, and 4 families in a big way. And the reason is that the home building industry stopped building them 15 years ago, right? The whole home building industry got obsessed with luxury single-family homes for a good decade. And the research shows that there's a massive shortage of particularly 2-family houses out there. And so what that tells me is that there's going to be demand. A 2-family house, did you guys start by living there and then moved out?
Yes.
Okay. So
yes.
That is like the smartest thing in the world to do for a young couple, to buy a 2-family house, let your tenant next door pay most of the mortgage down, and then when you move on to a bigger place, keep it because it's much easier. Like in the New York area, the best way to generate a positive cash flow is to own a 2 or 3 family because you have 2 or 3 people paying rents, which generally will give you more rents than you could in the same number of square feet in a single-family home. But the lenders, I'm glad you asked this because the lenders are being real silly when it comes to the multifamily or when it comes to the investor market these days. They're disadvantaging experienced investors, meaning there's a whole bunch of regulations on the books that make it difficult for you to be able to refinance. For example, you won't be able to use the income to help qualify for the mortgage. So you have to you got to qualify for the mortgage on your income from your jobs, and you can't use the rent that you could have 2 tenants in there with 10-year leases, and the Fannie Mae and Freddie Mac backed lenders will not allow you to use that income to qualify for a refinance. So it is a pain in the neck. If you pull the money out, you'd incur some costs on the way out, like we said in the last segment. And if you're going to put it back into real estate again, you can leverage more real estate. You can buy more property. Here's the question that I would make sure I would answer for yourself before you made a decision. Make sure you can get a mortgage on the properties that you want to buy. Because some of the same restrictions that are keeping you from getting cash out of your existing property, those same restrictions might keep you from putting that money into another property and getting a mortgage on the next ones, which means you'd be coming out of a good investment and then having a hard time getting back into another good investment. Does that make sense?
Yeah, it does. So do you, just as a suggestion, the foreclosures, like there's certain really big websites that have a lot of stuff going up for auction, and you can get into multifamilies, not necessarily in this state, because we'd like to move out of this state, that are, really good buys. I actually have so much liquid I could possibly own them for cash, whereas the house I'm in now we have another 20 years to go.
Okay, yeah, that's a good point you make. When you come out of the New York area, the price points take a nosedive. You know, I mean, you go to places in Florida, for example. You could buy a single-family home in Jacksonville, Florida, for $75,000 and rent it out for a 10 or 12 or 13% profit just on the rent. Forget about the appreciation in the market as time goes on. And so, if you're paying cash where you're going, that would eliminate, obviously, the worry about not being able to get a mortgage. I guess my advice, you know, without knowing you personally, my advice is just make sure that your money, if you like real estate, you've got good results with it so far. Having a lot of equity in property is I'm sure you go to bed at night feeling pretty good about the fact that you've got solid equity in real estate, which nobody can take away. You just don't want to find yourself in a place where now you've got liquid cash and you can't put it to work for you. But I love the idea of leaving the New Jersey area with some of that money and putting it in other places around the country, because the industry of property management is rapidly getting up to speed to be able to help you in a very, very efficient way. Like so efficient, like your iPhone will buzz when they replace a light bulb. You know, like really, really good, tight property management and communication. So, Manya, I hope that was helpful. Thank you very much for the call. Let me expand on what I was just saying about how the national marketplace is now open to you, okay? You hear people talk on the news about the real estate market, the national real estate market, and there is none. It's a national marketplace, though. There's thousands of cities and towns across this country. Everyone has different fundamentals. Everyone has different tax base, different costs. Everyone has different population drivers, employment drivers. And researching individual towns will give you an expertise that nobody can ever take away from you. So if you're within the sound of my voice, chances are you're in the New York area, and chances are, you know, we're talking about an expensive marketplace, and you may not have $500,000 to throw around, but you might have $100,000 to throw around. In which case, I want to open up your mind to the idea that very, very rapidly right now across the country, the residential real estate industry. Those are my clients, okay? We had Tami Bonnell from Exit Realty on the line earlier in the show. She's the president of an international real estate brokerage company. Those are clients of mine. We equip them with all kinds of tools and training and property management abilities so that you can, if you're not going to manage the property yourself, if you can have a property manager, well, then open the scope of the geography that you might invest in. Like think about, for example, where you go on vacation or where you've gone on vacation that you absolutely loved. All right. And I don't mean buy a vacation house on the beach. I mean, look a few miles inland and see if maybe there's opportunities there because there's ability for you now to do research in places thousands of miles away, invest in those places. And because of the nature of the price points being down, but the rents being up, like, for example, the entire state of Florida, right? Rents are rising. Prices are still falling in most of Florida. That divergence of rents and price means that you can generate a positive cash flow in most of the state of Florida right now. So you plunk your money down, you get a dividend essentially every month when your rent comes in. But then as the Florida economy revives, you wind up with building a nest egg through appreciation. And what you're going to wind up seeing is your rent plus your appreciation is going to generate for you 16, 17, 18% returns on a very, very stable investment. A single-family home in Orlando, for example, a single-family home in Sarasota. You can generate a phenomenal return. And what motivates me here at Randon Real Estate is to try to compel you to do this. Okay, try to compel you to research it, to learn about it, because it can be a major life-changing event for you to make a decision like this. You're listening to Randon Real Estate, 77 WABC and WABCRadio.com. This is brought to you by Own America. Check us out at ownamerica.com. We are the real estate website for the individual investor. So come on board, take a look, do some research, invest for your future. It'll work out for you. Thanks a lot. This is Greg Rand, 77 WABC. See you next time.